Jeremy Smith. I'm the Chief Strategy Officer for Second Market. We see really great things for Second Market in the next 12, 18, 24 months. We have a lot of markets that are just at their very beginnings, at their nascent stages. And we really see those developing over the course of the next 1 to 2 years. One market in particular is our private company stock market, where in just the first year, we did about $50 million in transactions. And this year, in 2010, we're going to be closing in over $400 million in private company stock transactions. So that is by far, I would say, our most successful market, our fastest growing market, and our most exciting one. As we've been experiencing success in the alternative investment universe here in the United States, we've started to get more interest from international buyers, largely out of Asia, Europe, and even Israel as well. So that led us to really want to explore those regions and see what opportunities might exist there. The very first one that we took a look at was Asia. And the most logical place that it seemed for us to start was in Hong Kong for a variety of reasons. One, it's obviously a global city that's very easy to get into and get out of, as well as the level of financial sophistication that exists within that city is tremendous. And if you're in Hong Kong, that gives you very ready access into China, which is obviously a critical geography over in Asia, but it also doesn't preclude you from expanding into Singapore and Taiwan and Korea and Australia. So Hong Kong seemed like the perfect base of operations for Asia. Where really the key opportunities there are both our private company market as well as our LP interest market. In regards to Israel, what's great there is that we found a very vibrant startup community in Israel that our private company market is perfect for. It takes those companies a lot longer to go public than it ever did before. And so we said, well, that's the same issue that exists in the United States, and it's why our private company market has expanded so greatly. So let's take that very same model, bring it to Israel, and help bring liquidity to that startup universe. The way the Second Market identifies markets that are appropriate for us and that we should really be moving into. One is there an acute need for liquidity? If so, if sellers really need liquidity, and there's also interest from a buyer perspective, that's something that will indicate we should get into the market. Something else is we look for blue ocean. In other words, we don't want a lot of competition to already exist in the market. If for some form of alternative investment, there's already 2, 3, 4 competitors, then that's not the market for us. We want to be the first, or at the very latest, the second entrant into that market. Thirdly, it has to be big enough. If it's some market where there's only $1 billion in total opportunity, then it's probably not right for us. It has to be in the tens of billions of dollars area in order for us to consider it. And then lastly, it has to be a permanent dislocation in terms of what's wrong with the market. If it's only a problem that's caused by the current economic crisis or something of that nature, then we're probably not going to be interested. But if we see there is something fundamentally broken with that market, that's when we know we can use the Second Market solution. Yeah, it's definitely something to think about in terms of the level of competition. Should that dissuade me from entering a market if, in fact, there is a lot of competition? And largely the answer is yes. If you already have some very robust established competitors in the industry, then that should give you tremendous pause in terms of do you enter. Because there are many advantages that they probably already have from being there. Having said that, there are many scenarios where just because there's an established competitor, if you feel you can do it better, or you feel you bring something different to the table, then that's a great time to enter the market. A decent example of that, not a perfect one, but a fairly good one, is Facebook and MySpace, right? MySpace already existed, it had established a lot of traction, and Facebook could have just said, well, you know what? They're already the 800-pound gorilla in this market, so we'll just focus on something else. But they didn't, because they had a better solution, they had a better approach, and therefore they had the ability to beat competitors. But where you can find blue ocean, where you can find a place with no competitors, that's always a great place to target, because you can have the breathing room to learn, to make some mistakes, but still succeed because you don't have necessarily a competitor that's biting at your feet. And also at the same time, your profitability can be much greater in a market where there isn't a lot of competition to start.